If you own a law firm and can't answer these 5 questions in under 30 seconds, you're not running a business. You're running an expensive hobby. I just finished reviewing the financials for a law firm doing $4 million in revenue. And on paper, they look pretty healthy. But when I asked about their collection rate, I just got blank stares. Turns out they had over $680,000 in outstanding receivables that were more than 90 days old. That's not a law firm. That's a bank giving out free loans. Here's the truth. Most attorneys are brilliant at practicing law, but they treat their firm's finances like a black box. And according to the 2025 Legal Trends Report, the average law firm is carrying 93 days worth of work that's either unbilled or unpaid at any given time. That's 3 months of your firm's life sitting in limbo waiting to be paid. So by the end of this video, you'll know the exact 5 metrics that separate firms stuck at 2 million from those scaling past 10. And more importantly, you'll know exactly how to track them without hiring a full-time CFO. If you want one strategy like this every week that takes 10 minutes to implement but saves thousands, hit subscribe, because we're dropping videos regularly to help law firm owners just like you optimize their finances. But first, you need to understand why traditional accounting is failing law firms completely. We all know what happens at most law firms. You work the matter, you send the bill, you check your bank account, and there's money there. You figure everything's fine. But here's what's actually happening behind the scenes at most firms. Research shows that on an average 8-hour workday, attorneys only bill 38% of their time. That's about 3 hours. But it gets worse. Of those billable hours, only 88% actually gets invoiced to clients because of write-downs and adjustments. And then, of what you invoice, only 93% actually get collected. Do the math with me. 8 hours worked, only 2.4 hours actually gets paid. That's 30% of your day that generates revenue. 70% is just gone. And the worst part? Most firms don't realize it's happening because you're measuring the wrong things. You're tracking billable hours, which is an input, instead of tracking what actually hits your bank account, which is the output that pays your bills. Want to know the biggest lie in law firm management? If we're billing hours, we're making money. Here's the truth. Billing isn't revenue. It's a promise of revenue. And according to the 2025 Legal Trends Report, here's what really happens to an 8-hour workday. A 38% utilization rate means 5 hours of your day goes unbilled. An 88% realization rate means only 2.6 hours actually gets captured in client bills. And a 93% collection rate means you're only collecting 2.4 hours. That means $150,000 lost per attorney per year if you're billing at $300 an hour. Your billable hours mean nothing if you're not actually collecting the money. So here's what you should do instead. Track your realization rate and your collection rate. Your realization rate is a percentage of your billable work that actually gets invoiced, and your collection rate is a percentage that actually gets paid. Your industry average is about 88% realization and 93% collection, but top performers do better. If you're not tracking these monthly, you're flying blind. So let's break down the 5 metrics that you need to actually run your law firm like a business. And I'm going to give you these in order of urgency, meaning the first one is costing you money right now. Metric number 1, your collection rate. This is the percentage of your invoiced work that actually gets paid, not what you bill, what you collect. Here's the calculation. Total cash collected divided by the total amount invoiced times 100. So if you invoiced $100,000 last month and you collected $88,000, your collection rate is 88%. As I mentioned before, according to the 2025 Legal Trends Report, the average collection rate across firms is 93%. But here's where it gets interesting. It varies wildly by state. Some states see collection rates as low as 87%, while others hit 97%. That 10-point difference? On $1 million firm, that's $100,000 per year. So what can you do? Pull up last month's invoices and collections and calculate the number. And if it's below 90%, we're gonna fix that with metric number 2. But hold on, because metric number 3 is the one that most attorneys completely misunderstand, and it's destroying their profit margins. So metric number 2, total lockup days. How much money is trapped in your firm? This is a number I wish every law firm owner understood. Total lockup measures how many days worth of revenue is sitting in your firm, either unbilled or uncollected. It consists of 2 parts. Realization lockup is revenue that's earned but not yet billed. Your work in progress, where a collection lockup is revenue that's billed but not yet paid. Your accounts receivable. According to Clio's 2025 Legal Trends Report, the average firm is carrying 93 days of total lockup. Think about that. 3 full months of work that you've done, but you haven't been paid for yet. And here's what's getting worse. While firms are getting better at billing faster, collection lockup has been creeping up. Clients are taking longer to pay, which means more of your cash is tied up waiting. So what's the best practice? Aim for a total lockup that's under 60 days. If you're over 90 days, you probably have a serious cash flow problem, even if your profit and loss statement looks great. Want to improve your law firm's cash flow in the next 30 days without taking on new clients? reduce your lockup days. Here's how. Step 1, bill faster. The 2025 Legal Trends Report shows that realization lockup has been trending down for firms that bill weekly instead of monthly. Get that work in progress out the door. Step 2, collect faster. Send invoices immediately or shortly after month end to collect as soon as possible. And make sure you collect payments in a way that's convenient for your clients. Studies show that firms that use online payment options collect 40% faster than those that don't. Step 3, require retainers. This can be a game changer. When clients pay up front into a trust account, you eliminate collection risk. Here's an example of a client that had 93 days of total lockup right at the industry average. They implemented faster billing cycles and mandatory retainers on all new matters. In 90 days, they reduced lockup to 67 days and freed up $180,000 in working capital. Same firm, same attorneys, better systems. Metric number 3, realization rate. It shows what you're leaving on the table. Your realization rate is a percentage of your billable work that actually gets invoiced to clients after write-downs and discounts. Here's the formula. It's the amount you actually billed divided by the hourly rate times the number of hours worked for that attorney. So if your attorney worked 10 hours at $300 an hour, that's $3,000 total available to be billed. But if you only bill $2,700 of that, then your realization rate is 90%. According to the 2025 Legal Trends Report, the industry average realization rate is 88%. This means that the average firm is giving away 12% of their billable time. So in other words, for every $100,000 worth of work you do, you're only billing $88,000. That's $12,000 of work that you're just not charging for. Most firms write down time because of client relationships or it took longer than it should have. But if you're consistently at 85% or below, that's not generosity. That's a pricing problem or an efficiency problem. Top performing firms run at 90 to 95% realization rate. They bill what they work because they're efficient and they value their expertise. Metric 4, utilization rate. Are your attorneys actually productive? This measures the percentage of an 8-hour workday that goes towards billable work. The 2025 Legal Trends Report shows the average attorney has a utilization rate of only 38%. This means that in an 8-hour day, only about 3 hours are actually billable. Now I know what you're thinking, but we have admin work, client development, training. Yes, that is built into the metric, but is 38% acceptable for your firm? High-performing firms target 50 to 60% utilization. Anything below 30% means you have attorneys who are underutilized, and that's killing your profitability. But here's the good news. Since 2016, firms have increased utilization by 36%. Firms are getting more productive. The question is whether your firm is keeping pace. Track this monthly per attorney. It'll tell you immediately who's crushing it and who needs support or coaching. Metric number 5, revenue per lawyer. What's your firm's leverage score? This is the total revenue divided by the number of fee-earning attorneys in your firm. According to the 2025 Legal Trends Report, solo practitioners average about $83,000 in revenue per year. Firms with 2 to 4 employees average $157,000 per responsible attorney, and firms with 20 plus employees average nearly $295,000. That's a 3.5 times difference based on firm structure and leverage. So why does this matter? This number tells you if you're properly leveraged, whether your attorneys are productive, and whether your pricing is on target. If your revenue per lawyer is stagnant or declining, you have one of 3 problems. Either your rates are too low, your utilization is too low, or your realization and collection rates are killing you. This is the metric that tells you if you need to hire, fire, or restructure. It's that powerful. Okay, so here's exactly how to implement this starting today. Step 1, create a simple spreadsheet with these 5 metrics as column headers: collection rate, total lockup days, utilization rate, and revenue per employee. You can use Google Sheets or Excel, it doesn't matter. Step 2, block 30 minutes on your calendar right now, literally right now, to calculate each of these metrics for last month. Pull the data from your practice management software and your accounting system. We prefer a combination of Clio and QuickBooks Online. Step 3, set a recurring monthly meeting with yourself or your office manager to update these numbers. First Monday of every month, 30 minutes, non-negotiable. Here's what happens when you do this consistently. You stop being surprised by cash flow problems, you stop wondering why profitability feels unpredictable, and you start running a business that works for you instead of the other way around. Let me show you what this looks like in real life. We started working with a firm doing about $2 million in revenue. We calculated these metrics for them, and we gave them visibility into it on a regular basis so they all understood what was working and what was not. They had very good realization rates, but their collection rates were horrible. They were often waiting months to collect from their clients, rightfully so, but they had to plan accordingly for this. but it caused a lot of strain on their working capital. After 6 months of working with us, they had the visibility to make the changes that they needed. They started taking retainers and billed on the first of the month to get those invoices out as soon as possible. They also implemented an electronic payment system to collect in an easier way instead of waiting for clients to send checks on a regular basis. This shortened collection time or eliminated it in some instances where they were just billing against retainers. Also, they had the metrics to analyze their team performance and were able to coach up the low performers to improve their utilization and make more profit for the firm. That's the power of tracking the right numbers. You don't need to work harder, you need to measure smarter. We created a guide to help law firm owners track their finances in a simple way to build something scalable without more time. Leave a comment below or reach out on our website and we'll send it immediately. And if this video was helpful for you, please hit like and subscribe. It tells YouTube to show this to more law firm owners who need it. We drop one strategy like this every week that takes minutes to implement but transforms your practice and your financial life. Let's run your firm like the business it deserves to be. Thanks for watching.